Welcome back to the Pro Ticker Podcast, your Wednesday morning edition covering major financial magazine headlines, everyone. Today, we're diving headfirst into, well, a truly dynamic day across global markets.
Absolutely. Lots going on.
Yeah, we're talking significant trade developments that are reshaping alliances, evolving monetary policy indicators guiding central banks, and some really fascinating shifts in key sectors like tech and finance.
Mm,
Our mission, as always, is to unpack the most important insights and maybe some surprising facts from the sources we've got, including comprehensive reports from CNBC, Yahoo Finance, and Bloomberg.
right. Bringing it all together.
Exactly. We've got a lot to cover, from a massive new trade deal with Japan and its ripple effects, to the surprising strength of the U.S. stock market, the booming crypto sector, and of course, crucial corporate earnings telling us about consumer sentiment. Let's get into it.
It really was a day that highlighted how interconnected global finance is.
Yeah.
Many of today's biggest moves stem directly from policy decisions,
Especially trade, it seems.
especially trade, and the immediate, often quite dramatic, market reactions.
And leading all the headlines is this huge announcement from President Trump about a massive deal with Japan. He even called it perhaps the largest deal ever made.
Yeah, that's quite the statement.
So what exactly are the core terms? Why is it being labeled so impactful?
Well, a key insight from Bloomberg here is how the specifics really aim to tackle some long-standing trade issues. So the deal sets reciprocal tariffs, 15% on Japan's exports to the U.S.
Okay, 15%. That sounds lower than what was threatened.
Much lower. It's a really significant step down from that more punitive 25% threat that had been hanging over Tokyo.
Right.
And in return, Japan has made a huge commitment, investing, get this, $550 billion into the United States.
Wow, $550 billion.
Yeah. And beyond that, Japan's opening its markets more to U.S. products, cars, trucks, rice, other agricultural goods.
And President Trump, CNBC reported, emphasized the job creation side, right?
Yeah.
Hundreds of thousands of jobs.
Exactly. Focusing on that domestic impact.
And the markets, particularly in Asia, they definitely seem to cheer that news. Japan's Nikkei 225 immediately jumped over 3%, closing above 41,000.
Big jump.
Yeah, and we saw broader Asian markets like the Hang Seng, South Korea's KOSPI, Australia's S&P SX 200 all rise pretty significantly too. But the real fireworks, for me anyway, were in the auto sector.
Oh, absolutely. You're spot on there.
Yeah.
The auto sector's surge was, well, spectacular.
Just look at those numbers.
Shares of Japanese automakers saw these widespread, really significant gains.
Yeah.
Honda, Toyota, their stock prices climbed around 8 to 10%.
Nissan over 7%.
Nissan over 7%. Mazda surged over 16%. Mitsubishi Motors popped over 12%. Just huge moves.
So that 15% tariff, that's the key. It's relief.
It seems so. As CNBC highlighted, it's viewed as substantial relief compared to that 25% threat Trump had floated before. It signals a kind of de-escalation, frees up investment, boosts confidence. And interestingly, even South Korean car makers like Hyundai and Kia saw gains 5 to 7%, maybe hoping that this lower rate might eventually apply to them too.
Interesting ripple effect.
Yeah, and the question this raises, for investors is how much of this is genuine enthusiasm for new opportunities versus just relief that, well, a much worse scenario was avoided.
Right. Is it sustainable enthusiasm or just breathing easier?
Exactly. Historically, we often see that buy the rumor, sell the news thing. So a lot of this might just be a short-term relief rally, especially given those previous tariff threats.
That relief seems like a huge factor. But is there a risk this relief rally is just, temporary, that the underlying tensions haven't really gone away?
That's always the risk, isn't it? Fundamentals versus sentiment.
Now, let's quickly touch on the politics in Japan. This deal lands just days after Prime Minister Ishiba's coalition lost its majority in the upper house. Reports even hinted he might resign by August.
Indeed. And HSBC noted that a favorable U.S. trade deal could help stave off a no-confidence motion for Ishiba.
Ah, so it's politically useful for him, too.
Very much so. It highlights that critical point, how global trade policy really interacts directly with domestic political stability. A big win on the world stage can sometimes shore up a leader's position at home, especially when they're facing internal challenges.
Yeah.
It's a much-needed win.
And Trump isn't stopping there, apparently. He's already shifted focus to the EU after getting this Japan deal done.
That's right. The headlines are saying Trump shifts gears to EU.
So what does that mean for European markets? Are they expecting this similar kind of deal?
Well, their auto stocks certainly reacted positively.
Yeah.
Shares of Europe's giants like VW, BMW, Mercedes-Benz, they all rallied more than 5%. Porsche soared 8%.
On hope, basically.
Pretty much. They're rising on the hope of a similar tariff breakthrough. A city economist, Katsuhiko Aiba, quoted by Bloomberg, suggested the Japan deal could influence the course of talks with others like the EU and South Korea.
But you mentioned it might be more complex with Europe.
It seems so. The situation is inherently a bit trickier than with Japan.
And there's that looming August 1st deadline for those potential 30% U.S. tariffs on EU imports. The EU must be pushing hard for exemptions or lower rates.
Precisely. So the big question is, can the EU get a deal that looks like Japan's? Or will that August 1st pressure lead to something different?
And what makes it different?
Well, one critical point, Rella Susskind at Morningstar pointed this out, is Japan's massive $550 billion investment commitment to the U.S.
Right, that huge number again.
Yeah. While European automakers do have significant investment plans in the U.S., the figures just don't come close to Japan's commitment. Europe might struggle to offer a comparable incentive.
So that could really change the negotiation dynamic.
Absolutely. It gives the U.S. leverage.
Okay, let's move stateside. The S&P 500 managed its 11th record close in 2025. The Dow was also up, but the tech-heavy NASDAQ composite slipped a bit. What's going on there? Market seems resilient overall.
It does seem resilient. Jim Cramer, over on CNBC, suggests we're seeing a market rotation.
Rotation, meaning money moving between sectors.
Exactly. Investors shifting capital, maybe from hot sectors into undervalued ones or from growth stocks to more stable value plays. Cramer's view is winners had to cool off and the losers had to play catch up.
And we saw examples of that.
Clearly. Gains in consumer staples like PepsiCo, Procter & Gamble, and pharma giants like J&J and Merck. Meanwhile, some of those more speculative tech stocks, Palantir, AppLovin, Robinhood, Coinbase, they all declined.
So the question is this rotation, like Cramer says, just a healthy rebalancing? Or is it maybe a sign of something else?
That's the debate. Is it healthy capital moving to fundamentals? Or, as some fear, does this shift toward staples and pharma signal deeper concern about slowing economic growth? Investors often seek those safe havens when they anticipate tougher times.
Definitely something to watch. Let's pivot quickly to Singapore, another sort of global economic health check. Headline inflation there remains at over 4-year lows, just 0.8% in June. Core inflation even lower at 0.6%.
Yeah, remarkably soft numbers. Bloomberg noted this clears the way for Singapore's monetary authority to potentially ease policy, support growth in this uncertain global trade environment.
Because inflation isn't a worry for them right now.
Exactly. The Monetary Authority of Singapore highlighted that core inflation eased significantly to below 1% in the first 5 months of this year, way below expectations. For a trade-reliant economy like Singapore, low inflation gives them flexibility to stimulate without risking overheating.
Okay. Now, onto the U.S. dollar. It's been dropping, right? Down almost 10% since Inauguration Day, nearing 2-year lows. How's the administration viewing this? What are the implications?
It's an interesting one, the dollar, because there seems to be somewhat mixed messaging coming out of the Trump administration on strategy.
Mixed how?
Well, on one hand, as Yahoo Finance pointed out, a weaker dollar could boost exports, make American goods cheaper abroad.
Sure.
But it could also complicate things by pushing up prices for U.S. consumers buying foreign goods. Inflation risk.
And Trump himself wants a strong dollar.
He seems to be very much in the strong dollar camp, saying he's never going to let the dollar slide. It reflects that desire for global confidence in U.S. assets. But there's this ongoing debate among economists, too.
Long-term slide or short-term dip?
That's it. Is it a long-term slide, maybe indicating a loss of global investor faith, as someone like Jamie Dimon hinted? Or is it just a short-term fluctuation, as others like Mati Gandhi at SMBC Group argue, saying capital flows still mostly favor U.S. assets?
And there's even debate within the administration.
Seems so. Some advisors might see benefits in a weaker dollar for exports, while others, like Treasury Secretary Scott Bessent, tend to downplay its significance. This internal debate could signal future policy shifts that might impact inflation and trade for you, the consumer.
Fascinating. Okay, from traditional finance to the rapidly evolving digital frontier, let's talk Bitcoin, the Bitcoin boom.
The headlines there, too.
Yeah, we're hearing almost 16,000 Bitcoin holders have joined the Millionaires Club just between January 20th and July 20th this year. Total over 192,000 now.
It's an astonishing number of new millionaires in just 6 months, isn't it?
Incredible.
And this boom seems largely connected to Trump's support for the sector, plus the general optimism in the markets since his second term began.
And that new legislation helped too, right? The Genius legislation.
Absolutely. That's been a key driver. passed earlier this week, it provides a clear legal framework for taxation, stablecoin issuance, institutional custody rules.
So more regulatory clarity.
Exactly. And that clarity, as Bloomberg highlighted, is a real game changer. It reduces uncertainty, opens the door wider for bigger institutions to get involved.
And it looks like traditional finance is definitely taking notice. We're seeing this strategic partnership between Coinbase, the crypto exchange, and PNC Financial Services.
Yeah, PNC, one of the country's biggest banks.
So this shows how upstart crypto and old school banking are coming closer together.
It's incredibly significant, this partnership. It lets PNC customers actually buy, sell, and hold cryptocurrencies on PNC's trusted platforms.
Right, on their existing banking app, presumably.
That's the idea. And it really accelerates PNC's ability to bring innovative crypto financial solutions straight to their customers. What's fascinating, as you said, is PNC, which prides itself on being brilliantly boring since 1865.
Love that tagline.
Stepping into this really dynamic space, it just shows crypto's reach widening beyond the early adopters into the mainstream. They saw funds flowing out to crypto providers anyway.
So they want to keep it in-house.
Right. Provide that connection directly, accelerating crypto's journey into the financial mainstream. And we're seeing others too, Morgan Stanley, Charles Schwab, JP Morgan Chase, all actively assessing their options for similar crypto services.
Okay, shifting gears again, another transformative tech, artificial intelligence. Google parent Alphabet's reporting Q2 earnings soon, and Wall Street's definitely got its eye on AI revenue gains.
They certainly have. Google's AI overview tool is apparently already drawing 1.5 billion users.
Wow.
And their AI services are seeing 2x longer queries compared to traditional search. That suggests deeper engagement.
And they're investing heavily.
Massively. Expected to drop $75 billion to expand its AI capabilities just this year. But, as Yahoo Finance noted, they're also facing those antitrust concerns.
Right? The potential forced sale of Chrome.
Exactly. That could really complicate their AI strategy, given how integrated everything is.
And speaking of tech giants, Tesla's Q2 earnings are also grabbing attention. Particularly, its struggling core auto business. Deliveries down 13.5% year over year.
Yeah, that's a notable drop. The focus for Tesla really remains on that core auto business. It still drives most of the revenue.
And the robotaxi rollout. Still a focus.
It is. They're expanding testing in Austin, but apparently the San Francisco permits haven't even been submitted yet. So maybe some delays there. And looks like we might see a delay in revealing that cheaper EV model, too.
Now, on the broader AI front, we're also hearing President Trump is prepping a hands-off AI action plan. What's that about?
Well, the plan seems aimed at fostering U.S. AI dominance. Things like faster permitting for building AI data centers and possibly withholding federal funding from states with tough AI laws.
Trying to encourage development by reducing red tape.
That seems to be the goal. But it's not without controversy. Parts of it might target what's been controversially labeled woke AI algorithms.
So potential legal challenges there?
Expected legal challenges, yes. Even as companies like OpenAI are actually increasingly working with the government. So it raises this important question.
For the industry, for policymakers?
Right. How will this hands-off approach really shape the competitive landscape and maybe more importantly, the ethical development of AI in the U.S. long term? Will less regulation really speed up innovation or create unforeseen problems down the line?
Big questions indeed. All right, let's wrap up with some key corporate earnings and other notable stock moves from today. We had Alphabet, Tesla, as we mentioned, plus Chipotle, AT&T, IBM, Alaska Air reporting. Any standout performances or disappointments?
Well, looking at the after-hours movers, Texas Instruments plunged over 11%.
Ouch!
Disappointing Q3 guidance. They blamed weak auto demand, interestingly. A sign that maybe the auto sector boost isn't universal, beyond that initial trade deal relief.
So weakness in some parts of auto impacting chip makers.
Seems so. Other chip makers like Enphase Energy and Analog Devices also saw drops. Reflects maybe broader concerns in the semiconductor space right now.
But some sectors did well.
Oh, yeah. In contrast, the often sleepy healthcare sector, which has lagged for a lot of 2025, was a big winner on Tuesday. IQVIA leaped nearly 18% on a strong Q2 beat. Charles River Labs, Quest Diagnostics also did well.
So maybe that rotation we talked about into more defensive sectors?
Could be evidence of that, yeah. Some investors getting cautious about growth stocks, perhaps.
And it seems like, meme stock mania might be making a comeback. Kohl's, Rocket, Krispy Kreme seeing double-digit pre-market gains.
Yeah. As they say, the genie's out of the bottle sometimes. That kind of speculative buzz can just pop up, often driven more by social media than fundamentals.
Never a dull moment.
Never. And speaking of unexpected influences, Coca-Cola CEO James Quincy was talking about the resilient consumer economy doing generally okay. But what was fascinating
Yeah.
was him also mentioning President Trump's personal interest in Coke, even calling for the use of cane sugar.
Seriously.
Yeah. Quincy said they're actually launching a Coke option with U.S. cane sugar later this fall.
Yeah.
He added that Trump enjoys, how trade deals impact politics, how regulation shapes tech adoption, how market confidence shifts between different types of investments. It all ties back, eventually, to how these global movements might impact your own financial world.
Indeed. And that final thought, maybe, as traditional industries and these new technologies get more and more intertwined, what unexpected collaborations or maybe conflicts will define that next wave of global economic growth? And how will those shifts impact your financial world? Lots to think about. We'll see you all tomorrow morning with new headlines from major financial magazines.